Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's September 3rd. If you've been following my report this week, you know that it is jobs week this week. We had yesterday ADP numbers that come out. Today we get the initial jobless claims that we get every Thursday, and then tomorrow the Bureau of Labor Statistics will release its numbers, like the unemployment number, employment rate, and their new jobs created. So let's start with initial jobless claims. We had a revision here, going from 1.006 million all the way up to 1.011 million here. So with basically an increase of 5,000 jobs or 5,000 people applying for unemployment. Forecast for this week was at 950,000, and it dropped even further to 881,000, which is very good news that we see fewer and fewer people applying for unemployment. Let's move on here. We got labor costs for the second quarter. This is the final revision. The initial report came in at 12.2%. Forecasts were accounted for in that same range at 12.1, and it dropped much more rapidly at 9%, which is obviously good news that labor costs are coming down a bit. Productivity for the second quarter, we had 7.3%. Forecasts account for a slight uptick to 7.5%, and it jumped up even more to 10.1%. So labor costs are down, and productivity is up in the second quarter, which is good news. ISM non-manufacturing PMI. This is these next two indexes, which you'll see a continuation on the next report, are basically on the services sector. So the ISM's report was at anything is 58.1%. However, forecasts were accounted for 57, and it dropped a little bit further down to 56.9, which is still a good number. Anything above 50 is still considered growth or expansion. So let's go ahead and take a look at the next one, which is IHS Market Services PMI. So we had 54.8 in July, and it jumped up to 55 in August. So slightly different viewpoints. One's going down, one's going up, but both are in growth mode, which is obviously good. The good news. Let's jump over to the headline news. Right now, stocks are down. I think they're getting a little. Investors are revising a bit, looking at the valuation. As I mentioned a couple days ago, that investors are going to probably reevaluate where stock prices are at. May go through some type of correction as they've been kind of building up based more on optimism than looking at the real data yet. So I think they were expecting things to happen a little bit quicker, but probably the data hasn't reached that optimism level yet. So right now, they're still talking in Congress regards to stimulus package. Nothing seems imminent as of yet, especially with the elections coming up. Nobody wants to cave in or give any ground, and it seems like both sides are kind of dug into where they are. So it looks may not even have a stimulus package before the elections happen in November. But meanwhile, right now the stocks are also being dragged mostly down on technology, as we had mentioned. Technology has been the one that's driving the force of the stock market of late, but probably going more through a correction at this point where we're at right now. So let's jump to see how this is affecting the bond market and what's going on with interest rates. We're showing some improvement. We just went above the 25-day moving average yesterday, closed above it. We stayed above it. Actually, we closed it to the month on Tuesday. And right now we're up another 8 basis points. So we're starting to see some improvement in our mortgage rates, which is obviously a good sign for us and those who are obviously looking to refinance or purchase, that we're starting to get this uptrend a little bit, which means lower interest rates. So let's see how this is playing on the yields. Yields dropped down to just under 0.62 right now at 0.6185, dropping below that basically triple layer of support right there, as you can see here, 25, 50-day moving average, and that technical layer right there. And if this can keep it up, this will help out mortgage-backed securities even further and maybe get down back to this level where we saw back in early August, where we had more of probably the better rates we've seen all year. All right, so that's pretty much the wrap. Mortgage rates are slightly better today, and looking forward to seeing it continue. See how long this can last. Now, if you guys are here and you guys are either in the process of looking to refinance or looking to buy, I will leave my website up. I am a loan officer, work with a direct lender and on a national level. We do loans in pretty much in 48 states of the U.S. You can go there. We have information on the regards to different loan programs, to maybe things that can answer your questions. If you'd like to talk a little bit about your scenario, we can certainly help you out. You can reach me through that if you like, and we can certainly talk a little bit about how we can help you guys out. Either, again, getting pre-approved to buy a property or getting you ready to get pre-approved if you're not yet ready. And if you're looking to refinance, we had a couple different scenarios we can do, or different solutions we can help even with that. Maybe if you got kids in the near future, be going to college and want to come up with some planning strategies to retirement strategies or different things like that. Or even, unfortunately, there's situations where there's divorce situations where you need to mortgage your home. It becomes a community property and it becomes a tool where you guys need to obviously have resolve differences, and we can help you out with that as well, structuring the mortgage in a way that either keep the property or sell it or come out with different strategies that would work hopefully for both parties. All right, stay tuned and see the link after this video, as well as I'll put the link in the description. You guys have a great rest of the day. Thanks so much for watching, and I'll see you in tomorrow's video. Bye-bye.